lots of messages already. No, we should wait till 4. Especially because of the signals. Last minute things. Good afternoon and welcome to this media conference. Before I start, let me introduce my colleagues on the dais. My far right, we have Deva Ahuja, who is the CFO of Novelis. On my right, all of you know Satish. On my left, we have Steve Fisher, who is the CEO of Novelis. And after him, there's Praveen Maheshwari, who's the CFO of Hindalco. We are pleased to inform you of another milestone in the metals business. All of you know, of course, Novelis very well. And Novelis today has signed an agreement to acquire a company by the name of AEROSPACE. Let me tell you a little bit about AEROSPACE. AEROSPACE is one of the leading privately held aluminum rolled products company globally and is to be acquired by Hindalco for $2.58 billion. Let me, before getting into the details about AEROSPACE, walk you through the current position of Hindalco. Hindalco, as you know, is a leading global player in the non-ferrous metal segment, and with Novelis is globally the #1 player in the aluminum downstream business, as also a major player in the copper segment. Hindalco has had a phenomenal track record of performance, including in the area of project implementation. Last year, as some of you probably know again, was a remarkable year on every front. Record production of both aluminum and of copper, highest shipments at Novelis, highest revenue of $18 billion, and the highest EBITDA for the company as a whole of $2.2 billion. All of our plants operated most efficiently. For instance, both the new smelters, Aditya and Mahan, are amongst the lowest cost globally. And at the same time, Utkal Alumina in Odisha is amongst the lowest cost alumina producers globally. Birla Copper is one of the largest copper custom smelters at a single location in Asia. Let me now take you through the key terms of the definitive agreement that Novelis has signed today. Novelis has entered into a definitive agreement to acquire AEROSPACE for an enterprise value of $2.58 billion. This basically is broken up into $775 million for the equity part of it, the balance being debt, $1.8 billion. This is debt that ALERIS has on its balance sheet already that Novelis will be acquiring. Additionally, there will also be a earnout payment of $50 million, and my colleagues can take you through that in more detail in the Q&A after this. There will be no equity issuance, not from Hindalco, obviously, and not even from Novelis, and therefore the deal will be fully financed in the books of Novelis. We expect that the transaction will close in the next 9 to 15 months, and I believe that this is really the right opportunity for Novelis coming in at the right time. Let me talk to you about ALERIS in a little more detail. ALERIS, like I said some time back, is a leading global aluminum rolled product company. It has a diverse range of products. It is a global supplier of both aerospace and automotive sheets. It is the leader in the building and construction segment and the truck trailer segment, both in North America. ALERIS, interestingly, also has multi-year agreements with some blue chip customers. Its shipments in the year 2017 were about 800,000 tons with a revenue of $3 billion. So it's obviously a very substantial player in the downstream aluminum rolled market globally. It employs about 5,400 people. It has 13 high-capability manufacturing facilities across North America, Europe, and Asia. Importantly, it has also made investments of around $900 million in the last 3 to 4 years. And these, we believe, will now start to drive earnings and cash flow momentum from the next financial year itself. As I mentioned earlier, and as you know, Novelis is the world's #1 aluminum rolled products player. Post-acquisition, the combined entity will have a capacity of 4.7 million tons per annum, which includes Hindalco in India. And very obviously, this acquisition will solidify Novelis' position as a leader globally. Again, let me take you through the key highlights of the acquisition. As you will see later in the session, ALERIS today is on the cusp of what I would call transformational growth. It has invested in the last 3 or 4 years almost $900 million in new assets to support largely its aerospace and automotive businesses. And I see great opportunities to use Novelis' know-how to leverage ALERIS' production assets. There is also very solid strategic rationale behind this acquisition. It very importantly diversifies our product mix to include some premium segments where Novelis has not been present, such as, in particular, the high-end aerospace domain. It also helps to integrate both the company's assets in Asia, so both of the assets of ALERIS and Novelis in recycling, casting, rolling, finishing capabilities, and therefore it brings about enhanced operational efficiencies and a much more solid presence in Asia. This deal, therefore, helps to meet the growing demand in the fastest growing aluminum automotive market, which is China, which is growing, also a sector that is growing globally at 14% per annum. And of course, it helps diversify and therefore de-risk in terms of giving us a larger customer base. Moving on to the funding, as I said earlier, it will be a 100% debt-funded deal, and it will be on Novelis' books. And as you all well know, we have always focused on healthy financials and keeping a very healthy balance sheet, which is a philosophy that we follow and continue to follow, will continue to follow. If you look at broad financials, the pro forma net debt to adjusted EBITDA for the combined entity at Novelis, which is after taking in ALERIS, is forecast to peak below 4 times at the close of the transaction. And particular to note that this comes back to 3 times in a short time of 2 years after the transaction is closed. Hindalco as a whole, net debt to EBITDA is projected to stay below 3.5 at the time of the close of the transaction, and again comes down very quickly within 2 years to 3 times. So as you can see, the bite size is very much in keeping with the affordability, not to, of course, mention the quality of the asset and its appropriateness to Hindalco and, of course, to Novelis. Aleris helps diversify Novelis's product portfolio to enrich it. So to give an example, currently Novelis, the sales of Novelis are made up of 61% of beverage cans, auto 21%, and specialties 19%. What happens after this acquisition? After this acquisition, new sectors such as aerospace, building and construction, truck trailers also come into the fold of Novelis. These are sectors where, like I said, Novelis does not have a presence today. Therefore, it diversifies our product mix. It gives us a new set of customers in the auto segment where it deepens our presence. The share of auto goes up from 20% to 22% for the Novelis-Aleris combined entity. And as some of the organic expansion investments that we have made recently in Novelis and the large investment in Lewisport in Aleris start to ramp up, the share of auto in the product mix will actually go up in the next few years to 30%, which is in keeping with Novelis's philosophy and stated strategy of increasing the mix of auto in its product portfolio. Beverage can, on the other hand, will continue to remain at 47%. All in all, what it does for us is that it gives us a presence in market segments where we do not exist just now, and in doing so, it increases the share of high-margin products for the portfolio as a whole. So, for example, Novelis gets an entry into the high-end aerospace segment. Aleris also has a world-class R&D center in Koblenz in Germany, besides having very well-established manufacturing capabilities in both Europe and Asia. As all of us know, the overall demand for airline travel is rapidly growing, especially in this part of the world in Asia. And aluminum, we believe, will continue to be the most used material in aircrafts over the foreseeable future. The aerospace market is dominated by Airbus and Boeing, followed by Bombardier, and Aleris, interestingly, and very importantly, has long-term contracts with these blue-chip companies for various aerospace products, and these are companies who take more than 8 years to give approval. So this is something that we're buying into when we buy into Aleris. The acquisition also further solidifies our position in the value-added product space. Like I just mentioned, it enhances our competitive position in Asia. We have recently announced 100,000 tons expansion of auto finishing line at Novelis in China, taking the overall capacity of Novelis in China to 200,000 tons. Aleris has recently commissioned a facility very close by at a place called Zhenjiang, which taken together deepens our presence in China, which again is one of the stated objectives and ambitions of Novelis, which is to grow its presence in the fast-growing Chinese market. So these two plants, ours, that is Novelis's, and Aleris's, complement each other in terms of the asset set to serve the fastest-growing automotive market in the world, China, and at the same time, they create significant synergies. Given that the demand for aluminum is also growing strongly in the automotive sector, this acquisition enhances our ability to innovate high-strength, lightweight aluminum solutions to better compete against steel in automobiles. Again, this is a stated ambition for Novelis. I'm trying to underline the fact that this acquisition strengthens and takes forward the company into towards accomplishing several of the objectives and strategies, ambitions that it has set out for itself. It also widens our automotive customer base and the vehicle platform base. It also has key strategic assets serving the automotive market, including its new finishing lines in Lewisport, which is in Kentucky in the US. Interestingly, a significant volume of this plant is already contracted. That's an advantage to us as we buy Aleris. There is also over and above 100,000 tons of automotive capacity in Duffels in Belgium, which again will be of great advantage to us. And all in all, the larger and diversified asset base de-risks us essentially by expanding the customer base that we will be selling to. Let me also now talk about how this will impact Hindalco in India. We believe that the Indian aluminum market is today at an inflection point. Aluminum consumption today is largely skewed towards the electrical sector and by way of wire rods, and towards the auto sector by way of casting. But looking forward, we see a rapid increase in the use of aluminum in building and construction, in transport and auto, railways, aerospace, defense, and the solar panel segments, to mention a few. And therefore, we believe that the next phase of aluminum growth in India is expected to be in the segments of flat roll products and extrusions. In sync with this and to maintain its leadership, Hindalco plans to double its capacity of value-added products in the next 5 years. Again, this is a stated ambition of Hindalco's, for which a capex of $1 billion over the next 5 years has been earmarked. In the context of this, access to Aleris's cost-effective, continuous cast capabilities would significantly boost Hindalco's ambitions in foraying into the building and construction and transport sectors. I also believe that this will bring in the expertise in making a higher-end product range in India as compared to what we have today, and will of course contribute to Hindalco's effort in the Make in India program. So to sum up, I would like to assert that Aleris is a value-accretive acquisition for Hindalco and Novelis. Interestingly, it is accretive from the first year itself, both in terms of cash flows and in terms of net profit, which is very rare for an acquisition as large as this. As you know, Novelis today is the world's largest rolled product company, and with this acquisition, it not only solidifies that position, but it emerges with an even more diversified portfolio comprising of not just beverage cans, but also automotives more deeply, and the newly added high-end aerospace segment as well. It also gives access to Aleris's technology for Hindalco's existing aluminum value-added business in India, and will help particularly as Hindalco makes a foray in the building and construction and transport segments. Like I said earlier, the combined entity will have very strong financials, both from the quality of balance sheet and cash flow generation perspective, and supported by the recently made strategic investments in Aleris. There will be fund flows coming from these investments that are only partially ramping up in the first year after the acquisition. The potential benefits of this acquisition in terms of synergies is about $150 million on a recurring basis, and these are achieved largely through integration of the operations of both the companies in Asia, in supply chain coming together, and in sales and G&A optimization. Let me reiterate that this acquisition will be done at an enterprise value of $2.58 billion, and based on an expected EBITDA of $360 million in the year just post-closing of the transaction, this leads to an EV of a very attractive 7.2 times. That is something that I think is of particular importance to this transaction. An attractive valuation of 7.2 times. When you look at the EBITDA in the year just after the acquisition is complete. In terms of balance sheet, the net debt to adjusted EBITDA for the merged entity at Novelis is forecasted to peak below 4 times at the time of closing and come down very quickly to 3 times within just 2 years of the taking over of AEROSPACE. And at the Hindalco level, the consolidated net debt to EBITDA is projected to stay below 3.5 times at closing and expected to come down to 3 times and below 3 times within 2 years. So that is in terms of the health of the balance sheet and cash flows post such a large acquisition. So finally, we all believe that this, once completed, will lead to the creation of a company with a revenue base of $21 billion and an employee base of about 40,000 people. And the combined entity will be the largest aluminum company outside of China and the second largest in size globally. Thank you. Very happy to take questions.
Mr. Birla, Nisha Poddar from CNBC TV. And of course, you mentioned the synergistic benefits of $150 million. That's on a recurring basis. So if you are closing this transaction 9 to 15 months from now, in which quarter of which financial year are we going to see the full benefit kicking in? And what do you mean by recurring? For how many years? If you can explain that, please.
So as you know, the difficult part of answering questions I never do, right? So I'm going to request Steve to take this question.
Sure.
Sure. Is this okay? So the synergies you should think of in 2 buckets. One, transformational synergies, and another bucket is more traditional synergies. The traditional synergies we'll achieve very quickly within the first 2 to 3 years, and those are primarily optimization of supply chain procurement, savings, SG&A optimization, and so forth. The second large synergy bucket, which it makes up about another 50%, is this integration of our Asian assets and backward integration specifically in China, in order for us to have access to Shefi metal. Those benefits will come post 3 years after the acquisition.
So first will kicking in which quarter of which financial year?
We'll begin planning integration immediately and hit the ground running and try and achieve them as quickly as possible.
Clarity on $50 million, you said earn-out payment besides $2.58 billion. What is that, if you can explain?
So there's a certain earnings in North America from the North American assets that have been agreed to. And if earnings are above that, then Novelis is committing to pay up to $50 million at the max for earnings higher than those that have been agreed to in the business plan.
And any more investment in terms of the expansion projects already taken on by AEROSPACE that could be required after the acquisition is done?
So I think the main point that Mr. Birla made is that majority of the investments of AEROSPACE, which is really 900 million, has already been put in. And hence, we are going to get the benefit of those investments that are already made. As Steve said, the only investment we will make is for the China integration, which is one part of the synergy. So that is the only investment we'll make, because we will combine our automotive line in China with the AEROSPACE plant there.
How much will that cost?
That is about 300 to 350 million that we will have to invest.
In,
Mr. Birla, Ashwin Mohan here from ET Now.
Over how many years will that be?
That will be over the
million?
next 2 to 3 years.
So 2 to 3 years, additional $350 million of investment expected. $360 million of EBITDA you are claiming to achieve for AEROSPACE after it has done CY17 at $201 million. How will you achieve that? That's a tall order.
So actually, this is the important point that Mr. Birla was saying, because AEROSPACE's Lewisport automotive asset is a large part of that 900 million investment that they did, which is nearly $425 to $450 million. That has now been commissioned and is ramping up with qualified customers taking 60% of the volume, which is why we are taking that EBITDA which is going to be coming in this year and during the time of the closing. So within the year of us closing, the EBITDA of AEROSPACE will be 360 million. And if you actually look at AEROSPACE's own presentation that they put up in the refi, they make this point very clear. So which is why we get the valuation of 7.2. So this does not include any synergies. It's only the EBITDA coming from the Lewisport automotive asset, which is taking us to 360 million. The synergies will be on top of it.
Thank
So
you.
essentially, it's $900 million of investment that are still to give complete returns from facilities that are yet ramping up.
So automotive segment is going to ramp up. So if you can give us the roadmap for that, because that is the high margin product which you are trying to capitalize on with this acquisition, Mr. Pai.
So I think we'll be at full capacity in AEROSPACE's plants within 2 years of the acquisition, at the very most.
All right, one more question. North America is the largest market for Novelis, and with this acquisition, even ALERIS has a huge footprint there. What is the total market share that you will have as a combined entity in North America and Europe, which are the revenue-generating markets?
Sure. For Novelis, about 35% of all of our market is in North America, and then another 30% in Europe, and then it splits between South America and Asia. From a market share standpoint, you got to go down to the product level, and from a can, there is no overlap. From an aerospace, there's no overlap. They are in different products in North America in building and construction than what Novelis is in, so very little overlap. Where there is overlap is in the auto sheet business that is growing. And in that overlap, we see great diversification as it relates to our customer base and our facilities basis to continue to serve these customers in North America and globally.
Okay, we had a question here.
Yeah, thanks, Mr. Birla. Mr. Birla, what explains the shift gradually that we are seeing at Hindalco towards value-added products? And you spoke about the fact that two of the major sectors where you will benefit post this acquisition would be automotive and high-end aviation segments. Why are you betting so heavily on these two segments as compared to others?
So it's in keeping with Hindalco's and Novelis's strategy of getting into a higher value-added product mix. Essentially, higher margins, less dependent on the LME, therefore much lower volatility. These are the two key reasons why we want to move towards a higher value-added product mix.
All right.
Good evening, sir. This is Nidhi Rai from CNBC here. CNBC Awaaz, hi.
Yeah.
I'm Nidhi. Sir, I just wanted to understand about the approvals. Has the US regulator already approved, or after, once you are done signing the deal, then you will be approaching them?
Steve.
Yes, so there is no pre-approvals in the U.S., and so there is a number of regulatory hurdles that we'll have to go through. We feel very confident on. First would be the Committee on Foreign Investments in the United States, and then we'd also have to clear antitrust approvals both in the U.S., in the EU, and also in China.
I also wanted to understand that we were going through some research, and Moody's has, in 2018, they have said that they have downgraded the rating of the company. So I wanted to understand, before investing, on what grounds and what synergies you were looking forward for.
Dave, you want to take that?
So that's not accurate. We have not been downgraded. In fact, hardly.
Not you,
Talking
sir,
about
but
ALERIS.
the company in which ALERIS International.
Okay, so I think that ALERIS has been in an investment mode. They have been in a heavy 900 million investment cycle, because of which, the debt on their balance sheet went up. So the rating agencies in these matters become very conservative. And for us, actually, the timing is just perfect, because all those investments are made, and we are right here to get all the synergies out of these investments. It was basically the heavy investment phase of ALERIS, as a result of which the rating agencies took a conservative view.
Gentlemen, Kevin here from CNBC. If I understand correctly, Novelis now contributes about 60% to the consolidated revenues of Hindalco. What does this number go up to post the acquisition for Novelis and ALERIS?
So of the 21 billion of the combined revenue, Novelis plus ALERIS will be about 15. Am I right? Yeah. So 15 will be Novelis-ALERIS of the 21 billion in revenue.
And any liability on the pension side or any legacy contracts post the acquisition?
So yes, the liabilities on the pension side are 200 million, but then, these liabilities don't really materialize. They materialize over many years. So in all our valuation, we have considered the cycle over which the pension maturities will happen, the cash outflows will happen. So that's already baked into our valuation.
Mr. Birla, this is Sajid here from Bloomberg Quint. Just wanted to get your on the debt front, or especially Novelis, because it's going to be debt-funded acquisition. What is the current debt at Novelis, and what is the timeline you have of reducing the Novelis debt over a period of time? Because you gave an idea about how net debt to EBITDA, adjusted EBITDA, would be falling over a period of next 2 years upon closing. So can you give us an idea of how that reduction plan you have on that?
All right, so the current net debt at Novelis is about 3.5 billion. Now, with the acquisition being fully debt funded, the total debt we will be adding is about 2.6 billion. So altogether, even after this, we will actually be at a debt to EBITDA ratio of less than 4. And with the cash flow generation that we are having, if we factor in all the investments that we are making, and if we just net out everything, we think that within 2 years we will come back to our current levels. As a combined company, we will come back to around 3 within 2 years.
A debt of around what, $3 or $4 billion?
Well, so I'm not going to get into that specific number because that's like giving away the EBITDA. But all that I can tell you is that with all the calculations that we have, we should be within a very, very healthy 3 times.
And AEROSPACE recently undertook the expansion plan of $900 million. Once the full stream starts working, what is the kind of additional revenue generated from that expanded capital?
All right. So basically, when the facilities are fully expanded, rather than going into revenues which depend on aluminum prices, and ours is a pass-through model. AEROSPACE's model and our model is a pass-through model. So I would rather talk about EBITDA, and as was mentioned earlier, if we take the full ramp up, we'll be at 360 million within the first year of acquisition. And after that, we will see how the growth curve, goes, but it will be a very positive growth curve after that as well.
My question is because 2017, AEROSPACE had what, $200 million in EBITDA.
Yes.
And that excluded outages in aerospace and auto division of nearly $100 million. So now, if so what you're saying is that there's an additional benefit of only 75 million in EBITDA, because those 2 outages will come back and give you the additional $100 million going forward?
No, so that's not the way to understand it. So the baseline is about 202, as you rightly mentioned. On top of that, if you add about 40 million for outages and add another about 120 million, which are partly contracts which are on the books, where the supplies have already started, and then some unbooked capacity with the lines fully ramping up, which we expect will happen within the first year of our closing the deal. All that together, that 120 million is what will really help us to get to the 360.
Thank you.
Mr. Birla, how do you expect this acquisition to play out against the backdrop of a potential trade war that we are witnessing right now?
So that's a good question, but I don't think anyone has an answer to that except for one person, right? And we don't know how he thinks, so no idea. But I don't think it can be, it can create any kind of large variance. Steve, you want to add? Dave?
Yeah, understanding Novelis' business, we're very regional based. We don't have a lot of interregional shipments. So what we can do is we can serve our customers in each country with the assets we have or in the EU. So we actually, even with the trade duties that have been put on, see very, very little impact as it relates to business at both Novelis and AEROSPACE.
Thank you. This is Vindu Goyal with the New York Times. Mr. Birla, I'm wondering, did the Trump administration's imposition of a 10% tariff on imported aluminum make this more attractive, make AEROSPACE a more appealing company? given its strong position in U.S. markets?
So like Steve said, I think that's had only a marginal impact, and we don't know if the duties are there for how long they are there. So I don't think that has been factored into any calculation of return on this acquisition.
Okay, and just to follow up for Mr. Fisher, you said you were confident that this would pass regulatory approval. Given that the last deal to sell ALERIS failed to pass the Committee on Foreign Investment in the United States, why do you think you're going to be treated differently?
Yeah, so Novelis has a long history inside the U.S. We've been there for many, many decades. We have continued to employ many U.S. employees. We continue to expand with the recently announced expansion in Guthrie, Kentucky. And we think the presence of us in the U.S. combined with our parent company coming from India versus China, we don't see any reason why we would not clear CFIUS in the U.S.
Mr. Pai, will this put a brake on your repayment efforts? You had plans of repaying around rupees 5,000 crore this year. Also, the refinancing that you had spoken about earlier.
I don't know which...
On a consolidated level, would you be repaying more debt this year, or will you put a brake on that?
So let me make one thing very clear. So the deal is being financed with debt on Novelis. And I think they very clearly told you how, as the EBITDA ramps up, the net debt to EBITDA of Novelis will be around 3 in the next 2 years. Nothing changes on Hindalco India's balance sheet. So all our plans, whether it was, as Mr. Birla said, the expansion into downstream, our efforts to bring our net debt to EBITDA even lower, nothing changes there. Because you have two companies with very strong balance sheets on both sides, which has allowed us to do the deal on Novelis's balance sheet and then continue with our growth plans in the Hindalco balance sheet.
So no debt being added on Hindalco's balance sheet?
Yes.
Does it come in the way of repaying the debt as was planned so far?
Thank you, sir.
Mr. Birla, the Hindalco's share has been falling, especially after this news has come out. What would be your message to these shareholders who are thinking that, they are quite jittery and nervous about this entire transaction?
So I think, in a situation like this where news comes out partly, I think there is always some confusion, which typically would make the stock react the way it has. I think once investors have complete information, once they realize that the multiple we're talking about is only 7.2, given that the EBITDA will be 360 million the year that we actually take over the company, I believe that investors will view this as a very positive development. With that, if there are... Okay. Please go ahead.
Hi, this is Tanya from Mint. Just a quick question on how you're raising debt at Novelis to fund the acquisition.
Dave, you.
So we are working on several options, and at this moment, we are not in a position to give the entire details, but just given the strength of the balance sheet, we have multiple options. Now, I must also say that AEROSPACE recently did their own refinancing, and in one of the refinancing for the term loan, there is also a change of control clause. And we will look at possibilities on whether we can use the change of control clause and, sort of really reprice that debt and, not have to raise the entire debt as new funding. But these are all early discussions. All that I can say is that we have multiple options and it will not be a challenge to get this debt finance.
So essentially, we're looking at refinancing the debt that comes over from ALERIS to Novelis's level, which is far more attractive levels of interest.
Okay.
Sir, if I could give your permission, double bonanza on the day that you're announcing your acquisition in Hindalco. Finally, the much-awaited DOT approval has also come of the merger with Vodafone. Your comment, sir?
So I think it's a very exciting journey ahead of us in the sense of Idea and Voda coming together. And the actual work starts now. So we'll see. We're very optimistic about it. Okay, so we draw this session to a close. Thank you for attending, and we hope to get a positive response from all of you. Thank you.